Getting back to basics. In this video, I will explain the double entry system or principle and with examples show how it is applied in accounting. It is not a complex or a difficult principle, but it is extremely important. It is a fundamental process that all accountants and bookkeepers need to apply. So mastering this principle is imperative to mastering financial accounting. Okay, so we already know that bookkeeping is the process of recording financial information of a business, and the double entry system is used to record this information. As the name double entry suggests, there will be a dual effect for every accounting transaction. So in other words, every financial transaction has equal and opposite effects in at least two different accounts. It is used to satisfy the accounting equation, which forms the foundation of the double entry system. And we already know that the accounting equation is assets equals liabilities plus equity. In accounting, it is required that every transaction recorded be recorded in at least two accounts and in opposite sides. We call the one side a debit and the other side a credit. So for every debit entry, there should be a credit entry of the same value and vice versa. This practice ensures that the accounting equation always remains balanced in that the left side value of the equation will always match the right side value. As already established, in the double entry system, transactions are recorded in terms of debits and credits. All accounts have a debit and a credit side, and depending on what type of account it is, it will either increase or decrease that account. A debit entry refers to an entry on the left side of a ledger account, and a credit entry refers to an entry on the right side of a ledger account. To get the application of double entry correct, you need to do two things. One, make sure you know which accounts to debit and which accounts to credit. And this is something you will need to memorize. The better you know this, the easier accounting will be. Number two, make sure your total debit values equal your total credit values. It has to balance. Let us then look at the impact of debit and credit entries on the various account types. You will remember that the basic account types are asset accounts, liabilities and owner equity accounts, expense accounts, and income accounts. Asset accounts will always increase on the debit side and decrease on the credit side. Liabilities and owner equity accounts will always decrease on the debit side and increase on the credit side. Expense accounts will always increase on the debit side and decrease on the credit side. And your income accounts, well, that will always decrease on the debit side and increase on the credit side. Now I'm saying this again. Please memorize this. This is how you will know whether to debit or to credit a specific account. Right. So before we jump into examples of the application of double entry, let's just quickly look at an account in its simplest form. Double entry accounting can be illustrated using T accounts. It looks like the capital letter T, hence the term T account. A T account refers to the simplest form of a ledger account, containing the most basic parts of an account. At the top, the account name, the debit side on the left, and the credit side on the right. T accounts are often used as a useful tool for accountants and students in analyzing company accounts or in solving accounting problems. The basic steps to follow when recording a transaction is to A. Identify which accounts are affected by the transaction, and B. Determine which basic account type each account is classified under and whether to then debit or credit that account. Let me show you some examples on how to apply double entry accounting. Consider the following transaction. ABC Company purchased stationery of 4,000 Rand cash from ED Stationers. It doesn't have to be Rand, it can be dollars, pounds, rubies, whichever currency, it doesn't matter. The basic principle remains the same. So again, ABC Company purchased stationery of 4,000 Rand cash from ED Stationers. The two accounts identified here would be bank, because I spent cash, I did not buy it on credit. And the other account is stationery, because that is what I'm getting in return. That's what I spent my money on. With bank being an asset account and stationery being an expense account. So what happened in this transaction? Well, I used cash for the purchase, so the money in my bank account reduced and the amount that I spent on stationery increased. In other words, my stationery expenses increased. Knowing that the bank account is an asset account, we should then credit that account because my cash just decreased. And we know that the expense accounts increase on the debit side. So I will record a debit entry in the stationery account. You will now notice that the debit and the credit values balance, and that the recording of this transaction is now complete. Let's look at another example. Nix Plumbing received 5,000 Rand cash for plumbing services provided to a client. Considering the transaction, we will note that cash is received, thus the bank account increases, and that cash was received for services rendered, in other words, income. So now we know that the two accounts affected by this transaction is bank and current income, and both these accounts increased. Bank account being an asset account increases on the debit side, and current income being part of revenue increases on the credit side. Notice how the two values of the debit and the credit now balance. Now let's consider a transaction where more than just two accounts are affected. Grass lawnmowers sell a lawnmower for 3,000 Rand to customer A on credit. The cost price of the lawnmower was 2,500 Rand. Here you will note that multiple accounts are involved. Firstly, a sale took place for 3,000 Rand and it was supplied on credit. When something is supplied to someone on credit, that person, or it might be a business, is known as a debtor. So the two accounts affected here in this part of the transaction is the sales account and the debtor's control account. Secondly, the lawnmower was sold from inventory at a cost price of 2,500 Rand. So, the accounts affected for this part of the transaction is inventory, which is an asset account, and cost of sales, which is an expense account. Recording this transaction using T accounts, it will look as follows. We will credit the sales account because your sales increased with 3,000 Rand, and we will debit the debtors control account, which is an asset account, and the balance now owed to grass lawn mowers increased by the same value. Then, we need to remove the sold lawnmower from inventory as it no longer belongs to grass lawn mowers, and the entry will be to credit the inventory account and to debit the cost of sales account. This reduces your inventory value by 2,500 Rand, but it increases your cost of sales, which is the cost price of the inventory sold. Again, you will notice that the total debit values are the same as the total credit values. I would like to do one more example of a transaction where multiple accounts are affected. Let's consider this. Red Flowers pays a credit to the outstanding amount that is owed, 500 Rand, and receives 30 Rand discount. So from this example we can extract that a payment was made, so bank account is affected. The payment was made to a creditor, so creditor's control account, which is classified as a liability account, is affected. And discount was received, so discount received account is affected, which is part of income accounts. I'm going to enter the outstanding amount of 500 Rand as a balance brought forward from a previous transaction. And I'm doing it in a different color because it is not part of this transaction, but I want to give you a complete overview of what gave rise to this transaction and the effect thereof. But for the recording of this transaction, we need to do a small calculation. The example states that 500 Rand was owing to the creditor and that Red Flowers received 30 Rand discount. So we need to calculate the amount actually paid to the creditor. The amount paid was the 500 Rand owing less the 30 Rand discount. Thus, only 470 Rand was actually paid. When recording the transaction, we will credit the bank account with 470, reducing our asset. We will debit creditor's control with 470, reducing the liability. We then need to credit discount received with 30 Rand because discounts received increases our income. We then debit creditor's control with 30 Rand, further reducing the liability. So both the discount received amount and the payment amount is allocated against creditor's control account, settling the full balance initially owed. Before closing off, I'd like to recap a few important points. Double entry bookkeeping is one of the fundamental concepts of financial accounting. The accounting equation forms the foundation of the double entry system. For every debit entry, there should be a credit entry of the same value and vice versa. A debit entry refers to an entry on the left side of an account ledger. A credit refers to an entry on the right side of an account ledger. And lastly, memorize the impact of a debit and a credit entry on the various account types. So there you have it, short and simple. Subscribe for more back to basic videos and feel free to like and share these with anyone who might benefit from it. And if you have any questions or you would like to see a video on a specific topic not yet uploaded, just drop me a comment below. Also, if you would like printable clips of this video, where you can make your own notes or something like that, just ask. I don't mind sharing.